The monetary policy rate is the rate at which the central bank lends to commercial banks and is also used by banks to calculate their base rates. In January this year, the Monetary Policy Committee of the Bank of Ghana voted to maintain the policy rate at 16%. This was the sixth time the rate had been maintained at 16%. However, in March this year, the Monetary Policy Committee of the Bank of Ghana reduced the rate to 14.5%. The rate was maintained in May and July 2020 following the impacts of the COVID-19 pandemic on the economy. But ahead of the commencement of the 96th regular meeting of the Monetary Policy Committee of the Bank of Ghana from the 22nd to the 25th of September, the president of the Ghana Association of Bankers, Alhassan Andani, says he does not foresee an increase in the policy rate anytime soon.
I think the general posture I want to believe will be to ensure we can have an easy and quick recovery and therefore continue to make it a bit easy for businesses to access credit, for the banks to have liquidity, but they would also be wanting us to guide credit more into domestic production to avoid, any liquidity going to chase foreign currency, to want to import, and therefore bumping up the exchange rate. So because of the depression, because of the slowdown in economic activity, GDP growth is almost collapsed to under 2%. I'm sure the posture would be to ensure that the business environment is enabling enough for most of the SMEs and large corporates to come back and start production quickly. And the context of doing that is always the supply of credit and how affordable the credit is. But most importantly, I think they would like to guide us away from just giving money for imports, which would have the natural consequence of, hiking the local currencies exchange rate to the foreign currency or US dollar, which is our major trading currency. So I expect that they will hold the policy rate. We've seen some bit of pressure on inflation.
He, however, explains that the current state of the economy does not support a decrease in the policy rate.
At the moment, I don't think the fundamentals will support a decrease in the policy rate, especially when you're still seeing inflationary pressure, and also we need to ensure that that exchange rate, which I said is pretty stable, is maintained. And there's a fine balance between marginal borrowers who would rather, when the interest rates are too low, either use borrowed funds or their own funds to buy US dollars to start doing things which would hurt the foreign currency, I don't think the fundamentals are supporting a decrease at the moment.
Hi guys, I hope you enjoyed this video. Subscribe to our Citi TV YouTube channel for more videos on the Business Dashboard.
Tune in and stay updated on the key business news stories of the day with Business Dashboard every weekday at 7 p.m. only on Citi TV.